We're glad you could join us today to learn about personal finance. We created this video as a benefit to FCSLA life members and their families to enhance their financial literacy. We know that the smarter you get about personal finance and money management in your 20s and 30s, the more your older self will thank you. While we are not accountants, lawyers, or financial planners, we do understand the importance of continuing to grow your knowledge of personal finance. We also encourage you to develop relationships with trusted advisors like accountants, lawyers, and financial planners early in your career, as their insights and advice can help you to improve your financial literacy. And here's the cool thing. Money management is 90% discipline and 10% knowledge. And the good news is that you can do this. So let's start with the foundation of managing your personal finance, and that is budgeting. Living on a budget can help you live a life that has less financial stress. For most of us, there will be times in our lives when money gets tight. And if you understand the principles of a budget to manage your money, then you should be able to handle tougher times better. It's important to understand that everything about budgeting and personal finance is situational and based upon your life. Please keep in mind, when discussing financial concepts like budgets with friends, what works for you may not work for someone else.
So, what's in a budget? We start with your net income, which is the money you have after all taxes and deductions have been withheld from your paycheck. If you have other sources of income, then be sure to include that money too. Next, make a detailed list of all your expenses. At a minimum, look at the last 3 months of expenses and list every expense, and then group them into categories like rent and mortgage, groceries, entertainment, utilities, etc. You can also use online tools and apps to help you be mindful where your money is going. Some people like to use a debit card for all their expenses. That way they have one place to track everything. Others prefer putting expenses on a credit card, where you can track it daily, weekly, and monthly. But be careful. The interest charges on credit cards can become bad debt for you. So how do we build a budget we can live on? As we just discussed, the essential components of any budget include your net income and your expenses. Let's start by talking about the 50-30-20 rule of money management, which is a popular tool to live within your budget. The 50-30-20 rule enables you to create a budget and understand where your after-tax dollars are going, and here's how it works. You start by taking 50% of your net income and budget that amount for needs, which include things that are essential to your life, like food, shelter, utilities, and insurance. Next, take 30% of your net income and budget that money for wants, which are things we desire but aren't really necessary. These expenses often give us great joy, and that's why this is the area where we can frequently overspend, which can lead to financial trouble. Wants are things like clothing, shoes, dining out, and entertainment, movies, concert, Netflix, hobbies, and self-care. As you're learning to be more disciplined about money, start to track your monthly spending on these wants. The reality is that people confuse wants for needs, and if we're honest with ourselves, we really do know the difference deep down. But we're human and we like things that we don't have, so ask yourself, do I really need to buy this now? Or can I wait until I have more money in this part of my budget? There we have it. That's the wants category, where 30% of your net income gets budgeted. The remaining 20% is budgeted for savings, paying off debt, and retirement planning. You've got to make this 20% go far because it's really about your future. First, establish a rainy day or emergency fund that covers at least 6 months of your needs category. Ideally, if you can put aside 12 months, that would be great. Because life happens, people get laid off, companies go out of business, and you may need money to live on should one of life's challenges come knocking on your door. Of course, it is both smart and savvy to have the money required to pay off debt, like credit card balances, car loans, student loans, etc. And then you also want to invest and save for your retirement. All of us can find areas in our lives where we can cut back so that we can save or reduce our debt. Things like automatic payments or withdrawals can help you save money or repay debt because the money's taken out of your paycheck or your bank account automatically, so you don't even get the chance to spend it. How you see the world can shape how you save and approach your debt. Don't compare yourself to your friends who appear to be living large, because that can get you into financial trouble. Now you know the 50-30-20 rule of money management.
Wow, we've covered a lot. Now let's roll this up into several goals that'll help you achieve financial freedom and independence. Being savvy about your personal finance means that you still dream and have smart goals that will help you achieve your dreams. The first goal might be obvious, but you want to work towards getting the highest paying job you can. What you do and how much you get paid plays a big role in your financial wellness. Keep upskilling and take stretch assignments at work. This helps you progress in your job and your career and can enable you to make more money, get better benefits, and work smarter so that you can retire when you want and begin the next chapter of your life. Of course, you need to make sure that you want to do the job you have and that it connects to your purpose and values. No amount of money will help if you're unhappy with the work you do. This is where we hope that you will embrace a growth mindset, which means that there is plenty of opportunity in the world to learn, grow, and achieve the things you desire, which can make you happier in life.
Our second goal is all about your credit score. A high credit score indicates a person is more credit worthy. Getting your credit score above 740 points really helps you with so many things in life, from getting better interest rates on your loans and credit cards, renting an apartment, purchasing a home, a car, getting a cell phone, setting up utilities, and so many other things. Your credit score is a result of a few factors, including your payment history, the age of your accounts, and the amount of money you owe. Annually, monitor your credit report to make sure there are no errors, and if there are errors, then dispute them. Ensure that those derogatory marks are removed from your credit history because each derogatory mark will lower your credit score and make you less creditworthy. Monitor your credit card interest rate. Look for credit card relationships that have cost-effective interest rates or great promotional rates, but be sure to read the fine print. It's also important to note that if you're only paying the minimum payment, this will end up costing you a lot of money in extra interest payments and can impact your credit score. There's a place on your credit card statement where it shows how much that credit card debt will cost you over time if you only make minimum payments. It can be shocking that a $2,000 credit card bill can end up costing you nearly $10,000 if you only make the minimum payments over time. Be sure to get rid of any bad debt and look for personal loans or credit card promotions that will allow you to cost-effectively transfer balances to lower interest rate cards or loans. For many of us, there are times that credit cards can become a crutch to purchase what we want and not what we need. If you do get in trouble with credit card debt or bad debt, there are apps and credit counseling services that can help you create a plan to reduce your debt over time. These services are often listed on your credit card statement, but be sure to do your homework to find out what will work best for you, and of course, talk to professional advisors who can offer their guidance and counsel on this and other personal finance topics.
Well, now that we've covered a little bit more about the importance of a 740 and above credit score, this will help to impact the next goal, which is what most financial gurus are proponents of, and that is purchasing your first home as soon as it's financially smart for you. This home could be your residence, or it could be an investment property where you rent it out to others, only as long as it provides positive cash flow. Establish a relationship with a bank or mortgage lender and work with them to better understand what size loan is right for you. Also, seek out a trusted relationship with a real estate professional who can provide insightful guidance regarding the purchase of a home or property. A single-family home or a multi-unit property can be a smart investment because it helps your financial well-being in a few ways. You're building equity in the property you own. As the real estate appreciates in value, it builds equity, and when you go to sell it, you're making a profit on that property. Please keep in mind, real estate investments can take longer to achieve your return on investment. Work with the people you trust and only make this type of significant investment when you are financially able to take it on.
The next goal is spending time educating yourself about finance in general, otherwise known as financial literacy. Investopedia defines financial literacy as the ability to understand and effectively use various financial skills, including personal finance, management, budgeting, and investing. Financial literacy is the foundation of your relationship with money, and it's a lifelong journey of learning. If you're in your 20s or early 30s, this is the perfect time to really learn about personal finance. It will help you be smarter, allowing you to maximize your earnings and investments and affording you the opportunity to live your best life. A strong foundation of financial literacy can help support various life goals, such as saving for education, a home, a family, a business, or retirement. Getting smarter about financial literacy comes through reading books, listening to podcasts, subscribing to financial content, and talking to financial professionals. Be sure to surround yourself with people who share your goals of financial independence. Learn and grow your knowledge together. You will thank yourself in 20 years.
Our next goal is how to invest. This means using your financial resources with the goal of generating income or appreciation. And appreciation means putting your money in investments that increase in value over time. This will help you to create future wealth. During our budgeting conversation earlier, the 50-30-20 rule states that you should budget 20% for saving, investing, retirement planning, and debt reduction. If your company offers a 401k plan, be sure to invest in it, and where possible, max out your contributions. If your company also offers a match, this is like getting free money to invest in your retirement. Make sure you take advantage of that. If your company doesn't offer a 401k, then there are other alternative investment instruments that you can include in your financial portfolio. Always work with a financial professional to learn what is right for your situation and risk tolerance. FCSLA Life is a fraternal organization, and it's important that we remind you that it's also your responsibility to do good in the world. Take the time and do your homework to explore the ways that you can do good when it comes to your personal finance. There are environmental, social, and governance investment strategies, which are known as ESGs. These type of ESG investments can help you align your investments with your interests, passions, and causes. As you are considering investing, be sure to think about the impact that you would like to make in your community and in your world. This will help you make better financial decisions on ways to put people, causes, and communities into your investment portfolio.
We've talked a lot about smart and savvy personal finance topic. Now let's wrap it up. Begin by knowing your numbers. Establish and live by a budget and use the 50-30-20 rule as a great place to start your budgeting. Get your credit score to 740 or above. It makes your financial life more manageable. Get the best job and career you can. Cultivate a growth mindset. And if it's true that what you think is what you become, having a growth mindset will help you bust through any ceilings in your career and with your earnings. Purchase your first home or make a real estate investment. This is considered one of the most popular ways to invest in your financial future. Get smart about your finances. Watching this video is a good step in that journey of increasing your knowledge. Stay current. There are always new things to learn about personal finance. Invest early and often. Make sure you understand the implications of your investment choices and always work with a financial professional to learn what is right for your situation and risk tolerance. Finally, be sure to do good in the world. Both you and our world will be a better place because you did. Thank you for taking the time to watch our video. We hope you learned a few things that will help you be smarter and savvier when it comes to your personal financial future. If you would like to learn more about FCSLA Life and how life insurance can fit into your personal finances, we would welcome the opportunity to have a conversation with you.